late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to do a market update. We're going to cover the stock market, major indices. We're also going to look at a few of our positions as well as some companies that I am interested in potentially starting a position in. So we're going to jump over to our other screen here, take a look at the charts. First thing we're going to do is start here on the SPY. So we see the SPY just flat for the day here. We're seeing a little bit of outperformance here by the IWM and the Dow Jones Index, which is nice to see. I've kind of talked about that lagging performance of the IWM, that's the Russell Shares 2000. So it's kind of more indicative of the broad overall market. That's the rest of the companies, not just the top 500 within that stock market. So it's important to pay attention because we want to make sure that the market in itself is healthy and it's not just liquidity concentrating itself within a select handful of names, which is kind of what we've seen over the past few years. Basically that Mag 7 making up a lot of the gains that the SPY or the NASDAQ has really seen. So we just take a look here. We're on the SPY. We're on our weekly chart. Take a look at the high time frame. We see here we actually have a decent little setup. You know, I do think we are still extended on the weekly basis. We've kind of moved off of this low here. So we came in, put in our initial low. We got that first initial higher low, and then we've just been basically up and to the right since. So we've been kind of pumping here with a few little breaks in between, but ultimately, you know, we were pretty much straight up here. So nice little recovery. We're back pushing right under all-time highs. We are in a bit of resistance here. So we've got this resistance zone up here. We've got some VRVP resistance here. But we're looking pretty good when it comes to the fact that we are above all our major moving averages. We're getting what looks to be that bullish cross here of the two. That being said, lots of the times price comes back down and comes into that 50-day moving average, even a little bit lower when we get this bullish cross here. So same thing that we saw when we were approaching the death cross. By the time that we actually get that cross, we've already experienced the majority of the downside. So what we do, rather than kind of so I'll show you here, we saw these moving averages. Essentially we started to see our low time frame moving averages. That's that 8-day and that 21-day EMA. So these two up here, pink and blue, we started to see those curling over, and we started to look and see that bearish cross here on the low time frame moving averages. So that's my early warning signal, along with some technical warning signals as well. So we saw that on the daily chart. We saw bearish divergences. We saw overheated indicators. We saw a slowdown of the bullish trend and a pickup of the bearish trend. We see our moving averages start to curl over on the low time frame. And then we also saw our 50-day moving average starting to curl over as well. So we hadn't even really experienced the downside right here. Just majority of the downside, like I said, right before that death cross. So same thing to the upside. We basically experienced the majority of the upside before we've actually had that golden cross. So a lot of people, you're going to see everybody talking about the golden cross because we're approaching another one here. You know, we're going to be going to the moon. Everything's going straight up. You know, in my experience, more often than not, when we get these golden crosses, we do come back, retest those moving averages before continuing to the upside. We can maintain this level down here and still be trending up on our weekly charts. We've got this prior low here. But yeah, paying attention, I think there's a good chance we come back down to this 575 region and retest these moving averages. There's also the chance that we come down to these lower targets. I've marked a couple daily gap fills. We've got one here. We've got one down here. We've got confluence of our Fibonacci support zone here. So we've got that 786. There's also that 618, and we've got buy order blocks down here. So there isn't really any major weekly buy order blocks for the SPY until we get back back down towards the lows. So I'm not really in a rush to put anything into the market. We're pumping back up. We're still stuck under resistance. As long as we're under this all-time high resistance, you know, it's looking like we could still break down and come back, retest these lower targets down here before getting that continuation move to the upside. Otherwise, we could also break out and then hold this as support. Look for that to happen as well. And we'll flip to the daily chart here in the 4-hour. We want to get a good idea of what's going on across all of our time frames and our indicators. So in terms of the weekly, we have a decent little setup. We got the bullish cross here on the vortex indicator. In terms of our directional movement index, nothing really to see right here. We still see that the bearish trend is the dominant trend with it on top of the positive line here. But we also see the ADX line curling over and coming down, which tells me that bearish weekly trend is slowing down, but we could be due again for that retracement. Same thing with the RSI, same thing with the MACD. They could come back down a little bit and reset themselves. These are lagging indicators, so by the time that these have reset, you know, we could have already come back, retagged some of these areas of interest, and then tried to go on our move up from there. We'll flip to the daily chart just to get another idea of what's kind of going on here. And we basically see, so the bullish trend is dominant here. Basically right here, we highlight that with the vortex indicator. We've got that line on top. I'll just drop the opacity for you a little bit. We see the RSI has come back down. We want to see that curling up. We did see is that bearish divergence. So I talked about that. Higher highs on the price action with higher or lower highs on the RSI or the MACD. So a little bit of a bearish divergence there. That's why I'm not really interested in kind of taking too much risk right now. We're in resistance. We're stuck under resistance. We've got that bearish divergence on the daily chart. We'll flip to the even lower time frame here, see what's going on the 4-hour. So on the 4-hour, we're starting to actually see that bearish trend pick up a little bit. That's kind of why I think, you know, the higher time frame, the medium time frame looks pretty good, assuming that the macro situation, so the geopolitical tensions, you know, war between Israel and Iran, all of the tariff stuff, that's still very relevant. We still need to be aware of that. If we can get some de-escalation on that front and we start to see more strength in markets, watch for it to break out of this pattern here, and then we want to see that continuation to the upside. So I think we'd break out, probably go into that all-time high resistance, retest our VRVP point of control, and then as long as we come up here, come back, we've reset our low time frame indicators by the time that we've broken out and retested here, and our high time frame indicators continue to still show that potential bullish pattern, then we can look for that continuation move where we're going to potentially break past all-time highs. We might even come back, retest the highs, so this could give a couple little entries here. The first being if we break out, retest, get in here, and then ride to the next target, and then ultimately we also could come back and retest these highs after the fact as well. So pay attention to something like that. Otherwise, the alternative is the downside risk. We break down here, we go into that downtrending price action pattern, and we need to retest our lower levels of support down here. This move is going to be really important to watch. If we break back down below and we get under our VRVP point of control, this is a lot of resistance that we're going to have to fight. So this is basically selling and buying volume that has occurred kind of at these levels, so they kind of act as resistance levels as well. So for the SPY, we could potentially go into either. Again, it's just that no man's land. We're just kind of consolidating here. We've also got a little bit of that rising wedge pattern, which I kind of showed in Baba previously, which wasn't the best pattern we saw here. Essentially, yeah, so pretty much we had a pattern like this acting as support, broke down, retested, rejected, stuck under this for now. So we need to watch this. I'll flip over to Baba and I'll show you exactly what I was talking about. So we see here, and then just flip back. So I marked this pattern a couple times here. Very similar pattern where we pumped up and then we went on this up sloping kind of push to highs where things started to get a little bit overheated. So we started getting some bearish signals on our indicators. Same thing here. We've got that up sloping, higher lows, higher highs, kind of that rising wedge. As soon as you break down, back test, get rejected. But we did have a better moving average structure on the SPY. So I don't think we're going to have a massive dropout like this, like we did in BABA, but this is the same kind of pattern that we need to be aware of. We've broken down, we retested it. It looks like we may have potentially been slightly rejecting, so we'll just pay attention to that. But for now, SPY is just kind of in no man's land. There is opportunities out there, but for me, I'm just going to sit on my hands on this one. We got our buys in down here at 485, and we're sitting in nice profits on those. NASDAQ looking very similar. So the NASDAQ and the SPY both showing a lot of similarities here. We do see that this trend line is holding intact for now. So NASDAQ can continue up. It's holding above, holding right under the highs here. So NASDAQ looks good. IWM also starting to show a little bit more strength. We got a bit of a double bottom here on the low time frame. We still have a lot of resistance above, but we are holding these lows and we're starting to outperform a little bit compared to the SPYs. So that's what I want to see. I want to see the broad market really catching up and kind of performing well. It was previously lagging. So the NASDAQ and the SPY we can see are well above their 200-day and their 50-day moving averages. And they're also much closer to all-time highs than the IWM or the Russell 2000, which tells me that people aren't necessarily taking that excess risk in the other markets, the more speculative stocks, maybe more the pre-revenue stocks, these smaller cap companies. People are focusing more liquidity in those larger companies. In terms, they just are kind of in a safer position if the market does drop out. If we went into a recession based on geopolitical tensions escalating, these companies are very well capitalized to survive any kind of downside. So it's not really a surprise that the SPY and the NASDAQ continue to outperform because of the perceived relative safety. When we take a look at TLT, it came back to our support zone here, sub $85. So we talked about that being a good opportunity to get into TLT. That being said, we are getting rejected into the 50-day moving average rate here. We take a look at the weekly chart. If we come back again, this is my recession hedge position. We did have one previously. We sold it at about 10 to 12% profits, and then we looking to kind of rebuild that position. The reason being, if something breaks out in a worst case scenario and we have a major breakdown in the economy, then bonds are going to do very well. And we see here when we look at TLT on a very high time frame basis, we're essentially at the the historical lows. So pretty much what we saw all through here, good opportunities to kind of trade TLT. If not, just build that hedge position. If things start to break to the downside, then TLT could really outperform if we start to see that risk off narrative really start to take control again. Gold here, we see gold is doing very well. It continues just to show a lot of strength. We are still holding this wedge pattern here, and we could continue up. But what we see, if we take a look at our weekly chart, let's take a look at this move. We'll pull some Fibonacci's, and we'll see if we can come up with a decent entry opportunity. So we pretty much see from this move down here, gold just went on this monster run. I don't think we're gonna come back down here anytime soon, but if you can get close to $2,500 an ounce for gold, it could really be a great opportunity to start a position or build a position. Otherwise, you know, this move has kind of already left the station. We can take a look at the lower time frame move down here. I'll just pull that Fibonacci for you, and we see right in that buy order block, that's 618. So kind of what I said previously, under $3,000 an ounce, you may look to add to your gold position or potentially start a gold position. If we can get closer to $2,500 an ounce, that's going to be better value in my opinion. Silver here we see has broken out in a big bearish engulfing candle. We did have kind of a breakout past these highs, so what we can see is a lot of previous support or previous resistance. If we can flip that to support, that's going to be really pretty interesting here. So we pretty much see we take this, we'll draw a little box here for our now support level, and we see that we've got this now. Watch for this to retest here and then potentially look for that continuation to the upside. When we look at our momentum indicators though, we are starting to see a little bit of bearish momentum picking up and a slowdown of the bullish momentum on the weekly chart. Let's flip to the daily and kind of getting that confirmation with the DMI angling aggressively up and the vortex also angling up like that. So in terms of silver, I would wait for it as well, not chasing this one. We're going to flip over. We're going to take a look at some stocks here. So a few that I am interested in. Marvel Technologies. This is one that I kind of have had on my watch list for a little bit. We are trending up. We've got that bullish momentum is dominant. Starting to slow down a little bit on the DMI here on the daily, but we are holding very well. So when we take a look at this price action, we've broken out of the downtrend. We're uptrending here on the daily chart. We had a nice big buy come in through here. So watch for this retest of these lows here. So we need to hold these lows right through here. We want our momentum indicators on the lower time frame to reset. We can see that they're just bullishly dominant here. So when we come back into this support, we want to hold the lows. We want these indicators to reset, and then that's going to be our signal that both the high and low time frame can support that move up. We also have got this VRVP point of control down here as well. So lots of support in this region here down to about $65 is going to be that position that we might look for in Marvel. CoreWeave here, I just saw it, it was down a little bit today. It's pumping again up to $180. This one just does not want to stop, so a really good move. And this is why I'm going to talk about MBIS. This is Nebius Group, a very similar player to CoreWeave, but a lot smaller. They are also in that data center GPU space in terms for AI infrastructure. So looking at this, we just pulled our Fibonacci's. If we do get a retracement back to the 50-day and the 200-day moving average, around $33, that's going to be a really good opportunity to pick up this stock, in my opinion. I would look to start a position down here. Definitely interested in that. So MBIS is one that I'm interested in. Marvel Technologies is one that we're interested in. I'll keep looking here. Micron Technology, I am interested in this one. Technically speaking, it does look pretty good. We are quite a ways off the lows, quite extended in my opinion. I would look for a retest of this VRVP point of control. If we can come back down sub $100, retest this downsloping trend line, I'm going to look for that entry there for Micron Technology. In terms of AMD, this is another one. We talked about this. We talked about this pattern, and what do we see here? We drew it before it even played out. Inverse head and shoulders, broke out, back tested, held the neckline as support. Not quite the neckline, but it held the lows of the neckline as support. So that's really important. And the measured move currently for AMD is $163. If we get that move up here, otherwise look for the retest of this support zone in through here. Watch for the multi-time frame indicators to reset themselves, show that bullish thesis again. Get that later kind of entry here, and then ride that position to the measured move target here. Otherwise, if it's going to just continue up, let's wait for this to finish out. You know, we're not chasing up here, and we're not... Again, patience. All of some of my best trades basically came when I looked at a chart that was really overextended. You know, from a fundamental perspective, it was really good, but from a technical perspective, it was just way too overbought. So I just waited patiently and just set your alerts and wait for those entries to come to you. Lots of the time, more often than not, they will. So AMD is one that I'm watching. If we can get another higher low retest, we could look to take this on a swing trade basis initially up to the measured move target, and then with a stop loss under support. Or we could start that on a swing trade basis and look to accumulate at lower high time frame targets down here. So when we flip to our weekly charts, we see that everything is a bit more extended than what it looks like on the lower time frame. So in terms of spot buys, if you want to accumulate AMD, closer to $100 is going to be what you're looking for. We've also got AVGO. This is Broadcom. So a few of these AI stocks, you know, this one is too overextended in my opinion. We're right at all-time highs. You know, I think Marvel Technologies, I think MBIS show a little bit better of a technical setup. We can take a look. Nvidia's still looking good. We'll flip over here and see if we want to take a look at any other stocks. Tesla's continuing to come back down a little bit here. So it did break out of this pattern, but we said, you know, likely going to come back, retest those lows, probably come down under, you know, around 300. Could look to add to your position down there. Also down here, that 618 is really going to be important that we hold those lows through there. So that's another opportunity. Tesla sub 300, you might look at DCAing again. In terms of others, let's see here. Palantir, let's take a look at Palantir. We've pulled our Fibonacci level. So where would I look to re-enter Palantir? You know, maybe $106, $105, building all the way down to that $80 range. There's going to be opportunities for Palantir. Looking at BABA here, again, we just take our Fibonacci's, look for confluence of support. We see that 786 here at about $105. So anything under 110, you might look to rebuild that BABA position. Previously, we took it at about $95 and we were actually stopped out. We'd only netted about 20-25% returns on that trade, but that's okay. You know, compounding 25% returns on a trade is nothing to be upset about. So BABA, just look for that sub 110, you know, but ultimately that 786 is going to offer better value. And we also see this 200-day moving average, 200-week moving average. We've got a buy order block here. We've got a pivot support. We've got this upsloping trend line, and we've got the VRVP point of control. So for me, building a position in BABA in this zone here between the 618 down to this support line here is going to be what I'm looking at for that position or that asset. We'll keep going down. We see MP here pushing up a little bit. So MP, this is one that I talked about. You know, we built a position and it's just been up crazy here. So looking at the next entry, if you didn't get a position, not chasing it now. We're up almost 2x from where we entered. So we're looking to protect that profit. I talked about that. We've got trailing stop losses on this. Currently, my stop loss is at $35. So protecting a lot of that profit, and then if it gets stopped out or we come back down to this level here around $30 or sub $30, you can really look to add to that MP position there. So that's just a few updates to some of our positions, as well as an update kind of to certain stocks that I'm watching, and the kind of update as well to the SPY. So I'll do another update this weekend over kind of about Bitcoin and the altcoin market a little bit more in depth. Really get caught up, you know, kind of really been taking a bit more time. You know, things are crazy right now. There's a lot of uncertainty in the markets, a lot of volatility. There's a lot of stuff that's into resistance that's a little bit overextended. You know, I do think sitting on your hands can really be beneficial at times. You know, I'm not in a rush to take any of these positions. Any of the trades that I've taken with you guys, I've never really been in a rush to take those trades. Like I said, a lot of them, initially when I looked at the charts, they were very, very, very overextended to the point where I didn't even want to consider it. And all I do is I plot my levels, I set my alerts, I wait patiently, and I execute my strategy. We're going to do that over and over and over. That's how we compound these successful investments, focusing on the fundamentals, focusing on the technicals, and mastering our strategy that helps remove that emotion and remove the ability or the chance of making the same mistakes over and over. So thank you so much for watching, guys, and I'll see you in the next one.